right, next up, everyone, let's get another round of applause for our next presentation from Tom DiGiovanni, the CFO of Harborside. He's here to give his company a presentation. Round of applause, please, everyone. Come on out, Tom.
Thanks, Nick. Yep. Great, got it.
Next.
Got it, thank you. All right, good morning, everybody. I'm Tom DiGiovanni. I'm here to basically tell you about one of the most storied cannabis companies in California, if not the entire U.S. cannabis industry, and that's Harborside. For those of you who don't know, Harborside was founded back in 2006, had one of the first 6 cannabis licenses in the entire United States. And before I get into that, I'll just tell you a little bit about myself, and then we'll switch back to the company. So I've been working in the cannabis industry since 2016. Came into the industry with a startup in California that became one of the largest brands of cannabis flower in the state. Have a number of firsts under my belt, including the first compliant bank account in California back in 2017, the first commercial scale solar project back in 2019, and the first large scale bank line of credit in the industry last year, where we got a $12 million working capital line from a commercial bank out in California. So as I mentioned, Harborside has a 15-year track record. We're going to go through basically who we are. I'm going to talk a little bit about our company's focus, our operations, and our results. So let's talk about Harborside and who we are. As I mentioned, 15-year track record. Harborside right now is focused on California and has doubled down on the state. And in the past, like many other companies, had the idea to be an MSO, but we realized that given the size of California geographically and economically, it's as big as 2 to 3 other states, and is $1 in every $5 in the cannabis industry in the entire country flows through California right now. So we decided it would be better to double down on the state, focus on growth within that state, and create a pretty compelling and attractive opportunity as a standalone entity. So we've got 5 retail stores today, 4 of which are in California. We're strong in the Bay Area. That's Oakland, San Jose, San Leandro. We have a store in Desert Hot Springs, which has the only drive-through in Southern California. And we have another store in Eugene, Oregon. In addition, we are vertically integrated, as many other cannabis companies are. 200,000 square feet of cultivation in Salinas, California. And we have almost 40,000 square feet of processing available right now. So you can see our market cap. Obviously, this is a little bit out of date, $100 million, and we're going to do, as we've announced, 68 to 72 million in revenue this year. Over 250 employees, and we've got some of the strongest brands in the state of California. I'm not going to go through this whole slide. I'm really going to talk about since 2019. This slide lays out kind of a 15-year track record. But Harborside went public through an RTO back in 2019. Since that time, we've opened 2 new stores. We have a 3rd store expected to open very soon in San Francisco. We acquired Sublime this year, which has one of the strongest brands of pre-rolls in the state of California and has licensing opportunities across the United States. We acquired our production campus. That's 47 acres with 200,000 square feet of production capacity. We invested in a company called Loudpack to get additional manufacturing capacity as we expand our brands and footprint throughout the state. And as I mentioned, we opened a bank line of credit last year, a $12 million line of credit to help fund the company. So as we look at our objectives, this year and going forward, it's all about essentially raising extra capital, growing the business, and really getting our brands out there across the state of California. There are about 800 retail locations in California. We sell into a little bit over 500 of those retail locations with our branded products, as well as we control over $40 million worth of retail shelf space ourselves in California. So the goal is that, for us to take basically all of our production capacity and put it onto our own retail shelves as we continue to grow. We are working on things behind the scenes that I'm hoping that we can announce very soon, because basically, if you think about what's happened in the cannabis industry, you look at the states that went adult use. California went adult use in 2018. About 4 years after, if you watch the trend, it happened in Colorado, it happened in Washington and Oregon, the wholesale market for bulk product basically starts to decline, prices start to compress, and really the hedge against that is branded products and putting your products in consumer packaged goods form. So we are working on that actively. We want to expand our retail footprint throughout the state, and we want to get more of our wholesale products into consumer packaged goods form and sold into other retailers and distributors throughout the state of California. I will also mention on this slide one of the things that we just closed on. We were running our Desert Hot Springs location on a management services agreement. We actually purchased that location back in September, and are now it's 100% owned for us. So let's talk about focus. I hit on this a little bit, but I want to spend a little bit of time on this slide. A lot of people think of California as an unlimited licensed state, and that's actually not true. It's really a two-tiered licensing system in California. You need basically local approval at the local jurisdiction in order to get a state license. So when you go through the process, you have to do the local jurisdiction first, and then you can apply for your state license. About 75% of the local jurisdictions in California have not come online for cannabis as of today. So it's a very limited market, and the locals generally limit the number of licenses that are available in their borders. So although California is thought of as unlimited license, that's not true. There's a lot of barriers to getting licenses throughout the state. And that also creates a lot of opportunity, given that 75% of the state is not yet friendly for cannabis. So as we look at the state, basically there's a number of growth opportunities as cannabis continues to expand, because now you have communities within the state who are saying, hey, we're missing out on all this additional tax revenue. How do we get involved in that? And they're starting to open licensing within their borders. And the interesting thing here, if you look at, there's only just over 2 stores per 100,000 residents. And when you look at Oregon, Colorado, Nevada, Michigan, some of the other states, there's plenty of room for growth in California. And it's an interesting state because cannabis has been basically legal since the late 90s for medical purposes, and has been fully legal for adult use since 2018. But it's a very, very competitive market. So in order to play in that state, you have to really understand how to get licensed, how to stay licensed, and then how to get your products moving throughout the state. So one thing I'll add, as I mentioned, we acquired Sublime, and this was the first of our moves towards basically getting more product onto more retailers' shelves other than our own. This slide actually says completes vertical integration. I would say it adds to our vertical integration capabilities. 200,000 square feet of cultivation. We're basically producing more than 20,000 pounds a year of flower out of that facility. And right now, a lot of our product goes into the bulk market. And as I mentioned, we're trying to actively shift that away from the bulk market and into consumer packaged goods processing. We basically have the ability to deliver throughout the state of California. And the 3 brands that we have into the market right now are Fuzzies, which some of you may have heard of. That's Sublime's brand. Yep, there's a fan in the audience. That's great. Sublime is another brand. We also have Key and Harborside Farms, which are the 2 Harborside brands that we sell into the market. Again, we do that through our own dispensaries as well as other distributors and retailers throughout the state of California. So here you can see sort of an aerial overview of our production site. One of the things I'll mention, we've got 47 acres of property there. We're using about 10 acres for cultivation and processing right now. We're about to sign a deal. We just announced actually this week that we're going to be doing one of probably the largest scale solar project in the cannabis industry in the entire country that will launch next year. That'll take up another 10-ish or so acres, but there's still plenty of room to expand. And when that solar project is online, it's basically 4.9 megawatts of solar with 6 megawatt hours of battery backup. So we'll be able to run our site for multiple days, and it's 100% of the energy coming from the site will be taken by the solar project. And if you guys know anything about California, with all the fires and everything else that's going on, there's lots of grid disruption and grid outages. So not only does this give us a solar backup, but it basically, if the grid goes down, we're not going to lose our crops. So it's a fantastic project, and I'm super excited. And I heard Kim talk about how difficult it is to get financing in the industry, and I can share with you that it was no small feat to get somebody to finance a solar project for a cannabis company. So we're super excited about that. This facility, as I mentioned, has room to grow, and we basically will be able to self-produce pretty much all the flower that we can consume, and we do see opportunities for contract grows for other folks, which is a very, very high margin business, as well as essentially continuing to produce and support the bulk market in some fashion. On the processing side, you can see our capacity here. Almost 40,000 square feet of processing. We can do 10,000 plus actually pre-rolls a day. And right now we've got 2 facilities, one in Oakland and one in Salinas. I can tell you that Sublime has a number of proprietary techniques to produce infused pre-rolls. They actually created that market in California a couple of years ago. Became the #1 brand of pre-rolls in California in 2020. I think this year they're tracking a strong #2. But still own over 40% of the pre-roll market in California. So very, very strong brand, and we have the opportunity to white label for others. I will mention that our distribution facilities, there's 2 flagged on this page, one in Oakland and one in LA, so basically Northern California and Southern California. We recently moved our Oakland facility to San Jose, which has about, the tax rates in San Jose are about 75% lower than Oakland. And as we, think about our business, we're sort of pushing from both ends, right? We're growing the company and we're looking to basically become more efficient and cut costs at the same time. And, those things are both to create a healthy business. I think everyone in the room knows how difficult it is, given the taxes and the other things that you deal with, to create a profitable cannabis business. But that's what we're all about. On this slide, you can see, examples of some of the brands, Fuzzies and Sublime, Key, Harborside Farms. And, it's interesting as a retailer, we have a pretty significant amount of shelf space inside the state of California. As I mentioned, we're trying to expand that. But one of the things that's happening in California, when you have a strong retail location, retailers will be willing to, the wholesale brands will be willing to pay for shelf space, end caps, and other things. So we do have a sort of a small business within a business where we're actually selling our shelf space and creating stores within a store and doing some other things to basically leverage our retail presence within our own stores. And as we continue to expand our own product portfolio, our goal is to push more of our own products across our own shelves because it's obviously much more profitable. The gross margins for self-produced products generally tend to be in the 60 to 70% gross profit range, which is fantastic. So, that's a pretty big win for us when we can put it onto our own shelves. A little bit of an overview of our retail locations here. As I mentioned, we have 5 operating dispensaries today. We've got a 6th that's going to be opening in the near future in San Francisco in the Haight-Ashbury neighborhood, which we're expecting to do pretty well because there's not too much around it within the city, and it's in a very, very good location close to Golden Gate Park. So you can see over 1,300 customer transactions across all of our stores. And our Oakland store has been open now since 2006. That is one of the largest single store retail locations in the state of California. Does more than $25 million in revenue a year from that one location. So that's a really good location. I'm going to flip over. You can see some shots of our management team and board. But we'll talk, just for a second about community involvement. Harborside has a long history of involvement in the community. And really, there's a thing that our founder used to say about bringing cannabis into the light. What we're finding is these types of messages really resonate with our customers. And so as we, look forward, we're really, really big on customer engagement, and we will continue to do these types of things as we go. Harborside has had a leadership position in the industry within California for quite a long time, and we expect that to continue. So let's talk about results. I came into Harborside at the end of 2019. We very, very quickly identified some low-hanging fruit. Since that time, we've had essentially 6 quarters in a row of positive EBITDA. You can see over $60 million in trailing revenue for the past 12 months. $29 million in gross profits, $7 million in EBITDA, and things are on an upswing now. We have a consultant inside the business who is working with us as a management team to actively reduce costs across the organization, and we are looking at a number of different accretive M&A opportunities right now that we hope to be able to announce very, very soon. What does that all lead to, right? I know you can't see the numbers on this slide. It's way too dense, but essentially what that leads to is when you look at Harborside relative to its peer group, it's significantly undervalued. And in my personal view, there's a significant opportunity from an investment perspective here. Harborside generally is trading at 1.3 times revenue. Our peer group's at 2.1 times revenue. And if you look at the bigger MSOs, they're trading in the 5 to 6 times revenue ballpark. So we have a significant amount of room basically for our stock price to move up. And I think that once we're able to announce some of the things that we've been working on in the background, we will see, some movement, some positive movement in the stock. Again, we're focused on California. And I know that given how hard of a state it is, when the MSOs finally turn their attention towards California, it's going to be extremely difficult to build a business from the ground up, right? The chances are that they're going to want to bolt on something that's already operating. It's already, made significant inroads in the state and has, a lot of value that can be unlocked. And that's really what we're creating at Harborside today. So basically, I think, again, we've got an opportunity here that is going to be very, very attractive going forward. Looks like I have about 4 minutes left, so if there are any questions, I'll take questions from the audience. If anybody has questions.
Looks like you've done your acquisitions, but California being fragmented, as you said, don't you need to bolt on more delivery? That seems to be where you're going to scale in that state.
Yeah, the question is about bolting on delivery, not just other retailers. And that's a great point. We did see a shift towards delivery during the pandemic, right? Just like food delivery and that kind of thing. A lot of consumers shifted their preference to delivery. We actually have a delivery operation that runs out of a number of our stores, which is kind of nice because we can use a hub and spoke concept. We are now investing in our own delivery operations. And we are looking at other delivery opportunities right now, I would say, in the background. One of the interesting things about delivery in California, there's a significant black market. Most of the black market right now is unlicensed delivery operators. So it's a really, really tough space. We're working on essentially getting our average ticket for delivery up. Right now, we're over $150, which is pretty good. We can actually make money in delivery at over $150. But a lot of other delivery companies, if they're going out and their average ticket is $40, $50, even $80, you can't make money at that rate. So as we've looked at it, there's a couple of things we're working on. One is call it a box program, similar to a wine club, but again, with a higher average ticket. And the other one is really investing in software to make our own delivery operations more efficient. And then our view is as we bolt on more physical retail, then we can actually expand our hub and spoke presence in the delivery space. So that's really what we're working on. If an accretive opportunity comes our way for a delivery operator, we would look at that. But we're really self-investing right now. And about 10% of our retail right now is through delivery. The other 90% is in store. So we're looking to basically pick that number up as well. I will mention, though, in the areas where we operate, as traffic has come back online, it makes it more and more difficult, right, to get more deliveries during a day when you're dealing with traffic in the Bay Area and elsewhere. So that's a tough space. That last mile is very tough, but we're absolutely investing in that.
Question about the water in your cultivation area. My question about the water usage and availability in California. California is a whole state of things like this. And how are you dealing with that?
Yeah, that's a great question. So the question's about water and, cultivating with a water shortage. So the area that we're in, one, there's not as big of a water shortage in the Salinas Valley. We also have wells on site so we can draw our own water. We do supplement that on occasion with water that's trucked in. But since we're growing hydroponically, water is really not the issue for us because we're not really, when you look at the scale of our operations, we're not really using that much water. The bigger issue is electricity and power because our greenhouse facilities are basically indoors with glass roofs, right? So they've got supplemental lighting and HVAC and those kinds of things, and those tend to be energy intensive facilities, which is why we invested in, we're moving towards adding solar to that site.
The two go together, but I'll talk to the
Yeah, absolutely. But, we don't see any shortage of water, at least where we're located in the near term. Thank you for that question. Anything else? Okay, well, with that, I'll wrap it up. I hope everybody has a great day, and I can't even tell you how exciting it is to see everyone in person instead of on Zoom. So thank you for attending today.
All right, Tom DiGiovanni, CFO of Harborside.